In this video, I want to introduce an amazing indicator on TradingView that will blow your mind. To add this wonderful indicator to our chart, here we click on indicators and we search T3PPO, this one, which is written by someone named LOXX. Alright, this is the indicator, and as you can see, it's added here below the chart. This indicator is a percentage price oscillator using T3 moving average. Percentage price oscillator is actually a momentum indicator that shows the relationship between two moving averages in percentage terms, and it is used for evaluating volatility and identifying reversal in trend direction. And for moving averages, it uses T3 moving average, which was developed by Tim Tilson, and it is considered a much better moving average since it is smoother and more responsive to the price action, and it performs better in range market. This indicator is used for identifying price exhaustion in the market. When it is dark red, it shows price exhaustion following an advancing of the price, and when it is dark green, it shows price exhaustion following declining of the price. So basically, this indicator has two use cases. It can be used for identifying reversals. For example, here you can see it became dark green from here at this point, showing we have exhausted selling pressure in the market. So this is a bullish signal giving the possibility of upside reversal in the market. And in another use case, we can also use this indicator for catching sharp movement of the price when the market is in the phase of final extreme movement before any reversal. In other words, there are times when the price is going through price exhaustion phase and we have an extended and sharp movement of the price before any reversal, and especially on lower time frames, we can catch these kinds of movement of the price and make quick profit. I will explain both of these trading strategies, so make sure you watch this video until the end. Let's begin with the first method. As I said, this indicator can be used for identifying reversals because, as I said, this indicator shows price exhaustion in the market, which usually happens before reversal. As I mentioned earlier, since the time that the indicator becomes dark green, this is probably a signal for bullish reversal because this shows that we have price exhaustion in downside movement of the market. In other words, selling pressure is getting exhausted. So basically, this indicator can be used in your reversal trading strategy for giving signals of reversal or more confirmation of reversals in the market. To show you an example how this should be used in practice, here I click on indicators and I search RSI, this one, relative strength index, and by the help of these two indicators we can effectively identify reversals in the market. When this indicator becomes dark green, it is not an instant signal for entering in the market, but it can remain in this situation for an extended period, as I mentioned earlier. So this is just a signal that probably in a later time we are going to have a reversal in the price direction. Following this development, here you can see that RSI is showing bullish divergence, which indicates that downside momentum is weakening and upside momentum is gaining strength. So right now we have two signals for reversals, having higher probability that a reversal is possibly going to happen. You may use the indicator for spotting trade entry. For example, when the color becomes gray, this is the moment that you can enter a long position, or you may use price action analysis when the high of the divergence pattern is broken. So based on the indicator, when it is turned to gray, we could enter a long position at this point when this new candle was opened. The stop loss below the previous swing low, and as you can see, this was a very profitable trade. To show you another example for this method, from here you can see that the indicator became dark red, showing price exhaustion in this advancing of the price. And as I said, we can have an extended period of this situation, which you can see that the price advanced up to this point before the reversal that happened in the market. So this is only telling us that probably in a later time we are going to have a reversal. Here at this point, you can see that RSI is showing bearish divergence, which indicates that upside momentum is weakening and downside momentum is gaining strength. So now we have two reversal signals giving more probability that the price is going to turn down. So when the low of the divergence pattern is broken, or when the indicator turns to gray, we can enter a short position at this point when this new candle is opened. The stop loss above the previous swing high, and this trade is also a very profitable trade where the price declined down to this point. Alright, the second method is catching the price movement when the exhaustion phase of the market is extended like here, and this can provide you trading opportunities, especially when you're trading on lower time frames. But here we are encountering more risk since we have signal of reversal, but with proper combination of indicators and proper risk management, you can effectively decrease and control your risk depending depending on your trading strategy, this indicator can be used as more confirmation of the buy sell signals that you can have in this period. To show you an example, I add ADX to our chart. This one, average directional index, which will help us with trending and non-trending markets. I add a horizontal line here at 20 level so we can easily track the movement of ADX line. As you know, when ADX is below 20, it shows that the market is not trending, and when it is above 20, it shows that the market is trending in one direction. So it can help us to more confirm the signals of this indicator. Please pay attention that when it turns to dark red, this is actually a bearish reversal signal, but we want to take the bullish movement, which can possibly happen in an extended period, or in case when it turns to dark green, we're gonna take bearish movement of the market. So don't make mistake. When it becomes dark green, we want to enter a short position, and when it becomes dark red, we want to enter a long position, and ADX will confirm. For example, here the indicator turned to dark green, and we are hoping for catching an extended bearish movement before reversal. But since ADX line is not above 20, we don't enter a short position here. Alright, here the indicator turned to dark red, and we are hoping to catch an extended bullish movement before reversal. When we check ADX line, we can see that ADX line is above 20. So we can enter a long position at this point when the snoo candle is opened. The stop loss below the previous sewing low, and the profit at 1.5 risk to reward ratio. Moving on the chart here, the indicator became dark green and ADX line is above 20. So sell signal here is confirmed, and we can enter a short position at this point when the snoo candle is opened. The stop loss above the previous sewing high, and this is also a profitable trade, as you can see. Moving on the chart here, the indicator turned to dark green. The ADX line is above 20, so we can enter another short position at this point when the snoo candle is opened. The stop loss above the previous sewing high, and this is also a profitable trade, as you can see. This was just an example, and depending on your trading strategy, these signals of this indicator can be effectively used in your trading strategy for more confirmation of buy sell signals that you have. Especially, I recommend to use it in a trend following strategy, so you will be sure that you are entering in the same direction with the overall trend of the market, so you will decrease your risk as much as possible. Please pay attention that there is no indicator or a strategy that can give you 100% guaranteed signals. Losing positions are always part of the game, no matter how accurate is the strategy or how much experience you have. So you need to manage your risk properly. There is a risk management strategy that is called 1% rule, and it's one of the best risk management strategies that you can use. I have a complete guide on this. The link is also placed in the description, and I highly recommend you to watch it, because without a proper risk management strategy, you cannot become a successful trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.